Welcome everyone, Bob Kendall here with Portfolio Expert. In yesterday's video, I discussed a strategy that's called the WaveTech Multivariate Global Equity Strategy. Many of you were surprised to hear about it. It's actually been in the system for over a year in the Portfolio Expert Premier Strategies. The strategy itself is a binary strategy. It has one signal that triggers all of the symbols in or out. Those symbols are generated through TradeStation through a different modeling process. It utilizes the WaveTech 1.2 model. The difference is that it's been optimized. And it's been optimized specifically for this signal that I'm utilizing to determine when to go all in or all out on this strategy. Good thing is you don't need to know any more than that, other than I go in and trigger the strategy inside the system. It delivers out to our advisory network so everybody can see those signals and model your advisory accounts with this. It's been extremely successful. I'll go through some more details, but I just want you to understand that this is something you can do with the power of Portfolio Expert. You can take any signals, any of your ideas, and do the same thing. Now, I've utilized a static allocation factor, and so that's why when we go all the way in, all the way out, leave about 2% in cash. Let's go to Portfolio Expert so you can see the details of how this strategy works. There's just a few elements I want to point out to you on how the WaveTech Multivariate Global Equity Strategy works. As I mentioned in the opening comments, this is a binary strategy. There's one signal that drives all the signals to be long or all of them to be flat. So it turns on or off. In this example, you'll see on the far right-hand side, you'll see that it's been off since the 24th of February, which came from a short-term signal that triggered the top, and then it just triggered back in today. I want to show you that just so you get an understanding of how this thing is triggering all in or out. On this chart here, what you're going to see is an example of the long-term performance going back to 2003. You'll see all the flat periods or periods in cash in the purple line show when volatility was showing up in the market, downside volatility. In 2009, it was able to protect quite well, even had a short-term signal during what I call the bear stern bounce. So you see a slight uptick, and that is where the bear sterns happen. We went flat and we stayed flat all the way into March of 09. And you can see the stair-stepping pattern. And this is exactly what we've discussed many years of calling this advance and protect. This is the true advance and protect strategy. There's a lot of folks out there utilizing that term, but they have no clue what they're doing or how to do it. This is a perfect illustration of how this works. You'll see that the green line below is the performance of an S&P. So going back to 03, this strategy is up 660%. Now this does not include the action that we saw today since we went long again. The S&P 500 is up roughly 215 over that same period of time, 215%. And if you're utilizing a typical 60-40 MPT allocation approach, you're up maybe 125. But this illustrates exactly how this strategy works and why this is the perfect strategy for your core offering for your customer. Two other things to look at is these are the allocations that were triggered by the March 30th buy signal. We have 5 symbols: EEM, emerging markets, EFA, IJR, which is a small cap, MDY, mid cap, and SPY is a large cap, or the S&P 500. What you'll see here is that the profit from today, just a one day, 1.285 on EEM, 1.6 on EFA, IJR was 1.6, MDY and SPY up over 2%. Now the indices were up 3%, but they gapped higher. This was where the fill came in. All of these positions were filled at the opening price of March 30th. The other thing I want to point out here is this could be a short-term signal that could last anywhere from 3 to 30 days, And if certain elements come into play and the intermediate models kick in, it will carry that for possibly for 180 or more days out in the future. So we don't know what the outcome of this position is. It may be very similar to what happened in 2008 that I just showed you, that little blip that was the Bear Stearns bounce. The other thing I want to show you here is the returns. This has been very solid going back to 2003. Now 2015 was one of the tougher years that I've ever seen since I've been trading the markets going back to 1979. 2016 was a rough year, but a little easier to navigate. 17 up 19%, 2018 down less than 1%, pretty good year relative to how the fourth quarter was in 18. And then in 2019, up 16, so far this year, down 1.838. And this is as of today's close and after the new signal that came in today. I hope this helped to explain how this works, and it's easy to access. If you're a Portfolio Expert subscriber, you go to the Premier Portfolios, you select the WTMV Global Equity Strategy. There's one for net that has fees coming out. There's also a gross. You can use either one. The signals are the same. The performance just reflects with or without fees. Hope you found this very useful. Thanks for watching.